welcome to the CI Live. My name is Rituparna Nath. I am the manager for price reporting of steelmaking raw materials here at Platts. I'm joined by Mr. Matthew Chamberlain, the CEO of London Metal Exchange. Thank you so much for your time today and joining us here in the CI Live.
It's great to be here.
Yeah. We're talking today on a very special occasion. The LME scrap and the rebar contract completes 10 years. So my first question is, could you tell us how these contracts have evolved over the last 10 years and what have been the challenges in terms of its liquidity growth?
Yeah, well, thanks so much for the invitation. As you say, it is a really special anniversary. If I think back to the 23rd of November 2015 and these contracts going live, if you'd said to me 10 years later I'd be sitting here having this conversation, with the success that the contracts have had, I would have been more than happy with that 10 years ago. So it's been a great journey, and I think really reflects a huge amount of hard work, obviously from the Platts team on the pricing side, from the LME team, but I think most importantly the industry as a whole, because let's not forget that 10 years ago the use of risk management products like this in the carbon steel industry was not particularly well embedded. It wasn't widespread. So there's been a need to go out and to educate and to advocate and to ask people to give it a go and to trust us. And we're really grateful that people have been willing to do that. And you see the results in the numbers. So last full year, 2024, our average daily volumes on the contract were about 50,000 tons per day. If you think about it, that's an ocean-going vessel full of scrap, right? After launch, that was what we saw in a month, and we now see that in a day. So there has been this really positive growth. It's been a real pleasure to be part of that, and I'm very excited.
Okay, and what do we look forward to, and what can the market expect in, say, suppose the next 6 months in terms of what you're doing to enhance the liquidity further?
Yeah, so looking now, where I think we are is that we have this great positioning with the physical market. And if you look at the usage of these contracts, whether that's recyclers or steel mills, through to service centers, distributors, physical merchants, so that's fantastic. But what we know from our sort of older contracts at the LME is that we really want to build that ecosystem where you have mutually reinforcing physical and financial liquidity. And what I'm really pleased about is that we're seeing increasing interest from the financial community, and that can be broken down into those who want to get price exposure, so CTAs, funds, etc., who increasingly see these contracts as a way of getting that price involvement. But also on the financing side, we've seen announcements this year from banks talking about a desire to get more into the steel financing business, and ultimately that does require hedging, and we think these contracts can be a big part of that. And then, of course, we want to make sure that our market structure rewards and incentivizes that as much as possible. That's why over the summer we made some changes to our market making programs to get those nearby month spreads, bid offer spreads, down to 1 tick in many cases, because it's that kind of market liquidity, market depth, efficient pricing that's going to bring in the next set of users.
Right. And how are you modernizing your trading platform to enhance the trading experience for futures and options?
Yeah, well, it's a great point, and obviously with the steel contract, we've always had those as sort of standard monthly futures contracts, which everybody knows how to access. For historical reasons, the core LME non-ferrous contracts, copper, aluminium, zinc, and the rest, they have a slightly more complex structure. They allow delivery every day for the next 3 months, every week for the next out to 6 months, and then every month after that. And that's a really important feature for the physical community. And to be clear, we're not going to change that, right? We want people to have that ability to use our structure to get that daily pricing or those average quotation periods, all the great things that the physical market do. But as I said, we do want to make sure that we're optimized for the financial community and financial liquidity. And those financial guys, they want a much more standardized monthly experience. And so we've been investing quite strongly in that. We have launched our new trading platform in March, building new functionality at a rapid rate, trade at settlement, differentiated tick sizes, things that our traders have really asked for. And in the first quarter of next year, we're going to be rolling out our block rules and crossing order type, which basically says that for that financial business on those monthly dates, we'd like to see more of that going through LME Select, our electronic trading platform, rather than the telephone market, because we believe that drives the best possible liquidity, transparency, and price competition. So we're really excited about that journey.
Right, thank you. Let us now segue a little into the topic of sustainability. So CBAM comes into effect in 2026. How does that impact the business, and how are you preparing to adapt to it?
Yeah, so this is a really interesting question, because our contracts are duty unpaid contracts. And actually that's been really important over the past few years, where you've seen a lot of trade tensions, etc. And what we've been able to do is to provide that global duty unpaid price, the real price of the underlying metal. So there was a route where we said, okay, actually CBAM is an EU-specific thing, and therefore not really anything to do with the LME, and just let somebody else address that problem. But I go back to the point that I make, that the physical industry really are at the heart of everything that we do. And therefore, we felt that we needed to make sure that if somebody takes metal out of an LME warehouse and imports it into the EU, they have the data that they need to be able to work with the CBAM rules, do their CBAM declarations. So what you now see is that for aluminium, which obviously is the metal that's impacted here, every ton of new metal that's produced by an LME registered aluminium brand or alloy brand, that the CBAM data has to be logged on our transparency platform, LME Passport, together with the electronic certificate analysis and sustainability data if producers want to provide that. So what we think we can now offer is the leading physical market experience, because if you buy metal on the LME and you take that metal out of warehouse, you can go in and get a standardized electronic record that gives you all your CBAM data, all your metallurgy data for when you put it into your furnace, sustainability data where that's been disclosed. And that's really important for us in terms of the experience of the physical market.
Right, but the evolution of green premium, I think, is quite fragmented across different products, something that we experience when we are doing our pricing as well. So in your opinion, which product do you think is the most advanced in terms of evolution of the green premium, and why?
Yeah, so this is such an interesting discussion, and I've really enjoyed being part of it. And I think the idea of sustainability premia is a really important one. And I personally believe that the metals industry will move towards sustainability premia. But obviously it's not for the LME to lecture on whether they should exist or they shouldn't exist. But we know that people want to know. They want to know whether there is a sustainable premium and what it is and what characteristics it reflects. So, and that's going to be part of, we can only be part of that challenge. And I think there's going to be a role for many people to play, price reporting agencies, exchanges, producers, consumers. But to answer the question directly, we do believe that aluminium is the metal that we trade that has the most immediate prospect for a sustainability premium. And there's actually a lot of interesting work going on that at the moment.
And you yourself have announced sustainable metal pricing. So could you tell us a little more about that?
Yeah, so we have been challenged to play our part here, and as I say, not to lecture people on what metal should, what carbon intensity metal should have, not to tell people there's a premium, but ultimately price discovery is what we do. We have had a number of people come to us and say, could we try to produce some data on sustainability premiums? And I think it's a really interesting area. So what we've done is to set up a little ecosystem that uses the sustainability data on our LME passport system from our listed brands, the spot trading capabilities of Metals Hub, which is our partner platform over in Germany, and then a new entity we've recently set up, Commodity Pricing and Analysis Limited in Dubai, which can take those price inputs and start, hopefully, to produce some helpful data which the industry can then use to think about this topic.
Right, and how do you see the role of scrap in terms of evolving the circular economy practices?
Yeah, I mean, scrap clearly has to be at the centre of the sustainability discussion. And I think we already see that across our core contracts. So actually lead, LME lead is one of the most circular contracts anywhere in the commodities world. It's a huge amount of secondary material goes through that, through the battery recycling chain. And we see it across our other metals as well. And indeed, when we put in place our responsible sourcing requirements, we produced a specific track, what we call track D, to ensure that post-consumer scrap can be brought into LME metals in a responsible way, but without in any way disincentivizing that circular flow. So we do see scrap as hugely important. I have no doubt that a big reason for the growth of the Turkey steel scrap contracts has been that circularity characteristic, and I think it's going to be a big part of the story going forwards.
All right. Before I let you go, I have one final question. So what is your Middle East strategy and where do you see growth coming from? Because you've listed warehouses in Middle East, you mentioned CPAL in Dubai. So where is the growth coming from and what is the strategy?
Yeah, so we obviously want to be a global market. We're in London, very dedicated to London. Our parent is in Hong Kong, and we have a great business throughout Asia. Obviously the US has always been very important to us. But we do see that there is an increasing growth in the Middle East. A number of our members now have trading desks in Dubai or Abu Dhabi or other centres. So we want to replicate that. We want to reflect where our members and our industry is going. So we now have warehouses in Dubai, in Jebel Ali, and recently on the Red Sea coast in Saudi Arabia, in Jeddah. So we've now got delivery warehouses on both sides of the Gulf Peninsula. And we also, as you say, have set up CPAL in Dubai because there's just so much GCC activity in this space, and we wanted to show that we're going to be close to where our clients are as well. So it's part of a global strategy. This is, we're very fortunate. This is a global market, and we have participation from all around the world. But we also want to reflect the way the industry is evolving.
Right. Thank you so much, Mr. Chamberlain. It was a pleasure talking to you, and thank you so much for giving us your time today.
Thanks for having me.
Thank you.